How's it going, everybody? Welcome back to the channel. It's Tuesday, June 30th, so let's talk capital. Alright, guys. So, as promised, it's the last day of the month. We're going to do a little recap. More importantly, it's the halfway mark of the year. So, big shift should be coming for the second half of the year. We're going to talk about which way these markets are going to go. We're going to talk about how these candles are closing on the 3-month and the 6-month and the monthly chart for all three big things we've been following: gold, S&P, and Bitcoin. Before we jump into that, go ahead and leave a like, subscribe to the channel if you haven't already, but let's get into it. Alright, guys, so S&P 500 daily pushed up to the downtrend. I don't remember if I had the downtrend video yesterday or not, but that's basically the downtrend we're looking at. We pushed up to it coming off the 200 moving average. Nothing too crazy for the daily. Obviously more bullish than bearish. We did get a close above this local high right here, so that's again more bullish than bearish. More importantly, our monthly candle for S&P and gold are closed, so we can look at that. Bitcoin closes at 5. It's currently 4:10 p.m. if you're on the West Coast. If you're somewhere else, well, just adjust your time accordingly. But we are about 50 minutes away. But S&P 500 has closed monthly, so our monthly candle closed just about what we thought it would, maybe a little bit more, but either way, indecision, right? Coming off of 2 solid bullish months, we get an indecision candle here represented in our spinning top candle. Just means indecision, nothing big, doesn't mean down or up. It just means we're basically at a stalemate for the time being. Now, it is very bullish that we closed above the 21 moving monthly average. That's a good thing. Again, we're holding this higher low trajectory. We're also holding the trend line. I just took all the drawing off the chart so we can just see purely candles here. We did get a rejection of this upper range, right, in this spinning top candle and the red monthly candle after. That was a rejection for the month, right? So now for this month, we want to see if we can hold this 21 moving average as support. So we don't want to trade under 3,000, and we want to see if we can come and test the upper range here at 32.35. That's basically goal going into next month. I think we'll be able to do both those things. I think we'll be able to do one last tap of 3K, and we'll be able to close the month probably around the 3,300 range. Now, we'll see what happens, but that's just my prediction for the month going forward. 3-month candle, piercing pattern, very bullish. It looks just like this setup right here, right? We come down, break right under the 21 moving average, piercing pattern right above. Next month we get a pullback to the 21, and we go up from there, right? That's exactly what the pattern we're putting down here. We also saw the same thing here, and we also saw the same thing here. So this could just be a bigger version of those 3 things. 6-month candle. I really don't have much to say about this candle. It pretty much just held the upper range of the trading range that we've been in for the past year, basically. Did get a rejection off the 21 moving average monthly, so that's a good thing. Again, we saw that here and here. If anything, this looks very much like this, but again, the big difference is this: when we're comparing candles like this, you want to understand this happened at the bottom of a massive move. This is happening at the top. So yes, they look the same. No, they could possibly not act the same. Okay, so it could be a bait and switch, if you know what that is. That's S&P 500. So short term, I'm gonna be a little more neutral. I think we're gonna see a little bit more consolidation before we move higher into the 33, 34, and possibly even take out that high. I think we're gonna need a little bit more consolidation. Long term, for the 6 months out, I think we're gonna be bullish. I think we're gonna get a break above this top right here. That's obviously me being super bullish, but that's just how I believe it's going to play out. It's going to be curious to see how that unfolds. Gold, I've adjusted a couple things here before we go into the monthly, 3-month, and 6-month. One big thing I want to tell you guys about diagonal trend lines like these ones. Horizontal trend lines always work. Okay, however you want to play them, they always work. No, I mean 99% of the time. Sometimes you get little breaks, but like if you were to enter a short at 16.19 right here, and you were to put your stop loss above here, you're not going to get stopped out, right? Obviously, that's a heavy stop loss, but that's my point. Whereas with these diagonal trend lines, you never know. Anything could happen. They could break and fly up one direction, break down other. They're very subjective. Okay, but this is basically what we've identified. This is an ascending wedge pattern. We did get a break above the 1781 finally, so that's gonna be that's a bullish sign. The bigger picture to see is we have Jesus, I really can't talk today. We have a ascending resistance situation going on here, where we put a high here, we put a high here, we put a high here, and we might have just now put a high here. Okay, two things to understand is this. As I go on the higher time frames, you guys can understand gold is very bullish. Second thing to understand is where to buy on a pullback. So on a pullback, this gray one, this gray line is our median price of this ascending wedge, right? So any pullback should get bought first here and secondly here. I do not believe we break this. I believe we break to the top. Anytime you have these anytime you're touching a trend line more, you're making it weaker, right? We've only had 2 bounces off the bottom one, yet we've had 1, 2, 3, and now 4. So the next one here will break this. It's only a matter of when we get it. We might get it here. We might just take it out now. Okay, but that's what we're gonna watch. So monthly close. Again, let's go ahead and clean this up. Monthly close, very bullish, very bullish. 3-month close, even more bullish. This is a massive continuation pattern candle. Whenever you see this, okay, it's more powerful at the beginning of a trend. However, wherever you see it, it is a very powerful candle, unless you see it at the top, and usually you don't want it to have wicks. Okay, so like basically this, okay, we can say all 3 of these, these 2, this one, okay, even this one, okay, the wick to the top side is okay as long as it's not super extended. You do not want a wick to the bottom side. Wick to the bottom side shows weakness. Okay, so this candle is a continuation candle. However you want to look at this, yes, gold is extended, super extended on the higher time frames. We should be expecting a pullback. However, this is a start of a new super cycle for gold. Gold will be going for 4,000 and above in price. Okay, so when that starts, we need to understand we're looking at a situation like this. And when we're looking at a situation like this, any pullback is usually between 1 to 2 months at max in length. Okay, as you can see here, the beginning of the cycle, right? Look, we've only been able to get 2 candle monthly pullbacks in red, and this is on the 3-month. Okay, so basically when gold pulls back, it pulls back hard, and it pulls back quickly to give an entry. So at the lowest end of an entry here, we're looking at like 1550, which I do not believe will be hit. Okay, but good solid entries are 1675 and anywhere between 1675 and 1550. I just do not believe those are going to get hit though, guys. I believe that we could possibly see a pull down to 1700 on like a freak candle, which could happen if S&P goes into a nosedive, something like this, right? We could just on a freak candle situation just dump down real quick and come over here and come back up. Okay, but again, highly unlikely. The real scenario here is we pull down to this level ish on this trend line, and then we continue moving higher. Okay, and then a 6-month before we move on, it looks even more bullish, right? So any pullback on gold needs to be bought, because again, we're not trying to snipe the ultimate bottom. We're trying to get in at a price that makes sense for us to ride to 4,000 and above and realize our profit targets, right? Gold specifically is not an investment you get into to get out of quickly. Now, if you're day trading it like I happen to sometimes, that's cool. But again, that's a whole different cycle situation. When we're talking about a super cycle, we're talking about a 3 to 7 year situation where an asset outperforms almost everything and outperforms the previous 2 to 3 years. So we're talking about something going and increasing by 300-400% in value. Okay, that's what we're talking about. Bitcoin, let's go daily here. Bitcoin is hitting critical levels here. I did clean up this chart a little bit. Like I said, as I said before, diagonal trend lines are very subjective. So once they get invalidated, as you guys remember, we were looking at a trend line here, something like that. That broke, and then I realized there's another one that goes like that, and then that broke. So once these things break, they become invalidated, right? So that's basically when you clean it up, take it off the chart, because there's no point in looking at that anymore. What we're looking at in Bitcoin right now is basically we're trying to hold this trend line. To me, this is the only thing left between us and 7,700. And basically, this is the trend line that sent us to 13K off of our $3,000 bottom to begin with. Okay, so this trend line has a lot of buying power. It is very good support, and once it breaks, you do get these crazy falls in price, right? As we saw here. Okay, and you guys have seen on 2 independent days, 3 now, okay, right? On 3 different days, we've tried to break this trend line, and we were bought back quickly. Okay, so there's a lot of buying pressure on the trend line. So that means all other trend lines, to me, uptrends are basically irrelevant at this point. Once this doesn't hold, then we're in trouble. Okay, so daily, we are watching for a possible higher low set at about 8,900, 8,950. Or if that breaks, ultimately, we're looking at our first stop at 8,300. And then from there, we go to 75 to 7,700. Now, the 3-month chart will be closing here. I'm sorry, the monthly chart will be closing here in 38 minutes, and that is not looking good, to be completely honest. It is not what I wanted. Definitely not what I wanted to see. I would have liked to seen this close at about 9,300, 9,400. We're getting it a close at about 9,140 if it closes right now. Okay, so what does this mean moving forward? Is that bearish? No. Is it bullish? No. That's the problem. We're kind of in stalemate here with Bitcoin. It is pretty obvious that we found an equilibrium between buyers and sellers. I believe Bitcoin has found fair value at 9,000 to 9,500. This is why we've been ranging here. And anytime we break above or below that range, we get bought up and sold really quickly. Okay, so what does that mean moving forward? Okay, well, moving forward, 3 months. Let's look at the 3-month chart. 3-month chart is closing as an engulfing candle of the previous 2 months. So 3-month chart is more bullish than the monthly chart. That's a good sign. That means longer term we're more bullish. 6-month chart is closing with not a textbook hammer, but it is still a hammer. Okay, not textbook, so therefore it does take away from some of its power, but it's still closing as a hammer, right? Anytime you have a wick rejection of about, how many percent is this? You know, when we have a 45% wick rejection, right? And anytime, remember guys, a hammer should be, the wick is 2 or 3 times the body. Okay, so the body is 26%, the wick is 45%, right? We're almost 2 times. Okay, this is why I'm saying it's not textbook. Also, there's a wick on top. Again, why it's not textbook. However, it is still bullish. That means we've rejected all price action down here. Now, what will most likely happen is this on this. If we were to trend lower, it would take us at least 2 to 3 6-month candles before we break this low. Because again, there's a lot of pressure buying it up here. So what that means is we could trend in a triangular. As you guys can see, this is a gigantic triangle, right? If I put a flat line here, we could just trend lower here until this ultimately breaks. That's the worst case scenario. Base case scenario is it's a wick. Is that this is a hammer on a 6-month. And what usually happens with hammers is you get a retracement into the body, which would bring us to about 7,500 to 7,100. And then you get a ricochet off of that, which would push us to about 14K for the next 6 months. Okay? Now, that scenario, along with our 3-month scenario of having an engulfing pattern with the push down to 7,200, 7,100 would not break the candle, along with our daily situation that is setting up, is telling us one simple thing here, and that is that our most likely scenario for Bitcoin is for it to push down to 81 to 7,100 before we get another rally to a 14K and ultimately 20K. What this means is that you should be ready for a drop. However, Remember, we're going to talk about both scenarios here because Bitcoin is the outlier right now and it's playing out both scenarios. It's not giving a clear indication of what it wants to do. So, however, if you see Bitcoin come up and close above 9,800 on a daily level, that means we will break 10K. That means we will break 10.5. That means we are going to 14. Why 9,500? Because of this simple reason. We had a high here. We had a higher high. We had a higher high, right? This is still an uptrend. Now we had a high, we had a lower high, and we had a lower high. Now this is our downtrend. So when you have a local higher high, which would be above this candle right here, okay, above the wick, okay, you want to see a solid close, that would also break all of our downtrends, as you guys can see, even this secondary downtrend coming from 2017 that we were talking about. 9,800 is the key level here, okay. What I believe is going to happen here is I believe we're just going to range in this area above our trend line, our major buying trend line here, and below our major selling trend line. I honestly believe we're just going to range here until we get a final conclusion on this around mid-July to end of July going into August. I don't believe this plays out anytime soon. I think the bulls and the bears in Bitcoin, the selling and the buying pressure are very equal. I don't think there is any side that has control over the market right now. I believe we do continue to push sideways and put in that unique market structure that we were talking about. Remember, guys, once we broke above 9,000 again, coming off this very crazy rally off of 3,800 here, I said that for Bitcoin to break above these trend lines, to break this downward sloping resistance that has been holding us down since December of 2017, we would need to put in some unique market structure, and that unique market structure would play in perfectly with what I just said, because if we were just to do this and then get a break, that would be a unique market structure. That would also be a bull flag, right? So we had that, and here's the flag. We had the flag, we have the pole, we broke out, and now you have to take the pole, and if we put it up here, that's your real break target. So as you guys can see how once this gets a nice climax out of it, we can then go ahead and set a new macro higher high too, breaking all of the downtrend situation and setting us perfectly up to go to 20 and beyond. So that's how our first 6 months played out in major markets. It's going to be very interesting to see how the next 6 months play out, because we do have an uprise in infection cases and COVID. It's going to be interesting to watch if we have an uptick in deaths too. As of now, it's been about 25 days since the uptick in cases. We have not had an uptick in deaths. So it's going to be very curious to see how that plays out, along with how these markets play out. But just like in the first 6 months, gold was the winner of the first 6 months. I'm going to go ahead and say gold's going to be the winner of the next 6 months too. I expect gold to get to about 2250 by the end of the year. We're going to see how this video holds the test of time. We're going to see how gold and Bitcoin play out for the next 6 months, along with S&P 500. But it's definitely been a fun 6 months, and I can't wait to do the next 6 months, keep you guys up to date with everything that's going on. I hope you guys have been enjoying the videos. Please leave a like, leave a comment, hit that subscribe button if you haven't, and I'll see you guys in the next video. Thank you for watching.